In this video, I cover how to compute relative prices. Relative prices are often used in relative strength or relative weakness analysis. I will also provide code in the Python programming language for calculations. Relative price series is the price of a stock divided by a certain benchmark. Also, prices for a stock and its benchmark can be in different currencies. In this case, you need to convert all prices to the same currency. This will allow you to control for currency fluctuations. The question is, why is it better to work with relative prices instead of absolute prices? The reason is this. Stocks tend to fluctuate with the market. When the market goes up, the tide lifts all boats. When the market goes down, stocks turn bearish. So working with absolute prices will produce results that are correlated with the market. On the other hand, relative prices allow you to partially control for the correlation of a stock with the market. Doing so will allow you to better screen stocks that may show uncorrelated positive alpha. Computing relative prices is not difficult. First, take a stock price series. While it could be open, high or low, let's work with the closing price. Next, divide the stock's closing prices by the benchmark's closing prices. Then multiply the result by the benchmark's first price observation like so. This will allow you to plot and compare relative and absolute time series for a stock. For instance, here's a chart showing absolute and relative closing prices for Nvidia. It shows that the Nvidia stock showed strong outperformance in absolute and relative terms. Next, let's see how to construct relative prices with the Python programming language. I will not go into many details for the code, as I assume you have some knowledge of Python. I will use the yfinance module to get stock prices. The module is available for free by using pip install yfinance command. This is the Python function that calculates the relative prices using pandas data frames. The inputs are the following. First is the data frame with stock prices. Then start and end inputs define the period for calculations. The next inputs are price series and a name of a benchmark. Then the data frames and name of foreign currency exchange rate follows. Price variable defines which price you want to use for relative series. Finally, the rebase input rebases the relative series by the first stock price observation. I will talk about the rebasing later. The most important lines in this function are these. They join benchmark, forex and stock prices together, preserving only common dates. As you may know, the forex market works 24/7, while the stock market follows federal holidays. If you set rebase input to true, this line will rebase the entire relative price series even further. It does that by dividing the obtained relative price by the first value of the closing stock price. Doing so normalizes everything relative to the value of 1. This will allow you to compare relative prices across stocks with ease. Let's consider the stock price of Nikon, traded on the Tokyo Stock Exchange. I use Nasdaq as my benchmark and USD Japan Yen forex rates for conversion purposes. As we can see from the graph, relative price series factors out the forex effect and shows how Nikon performed in comparison to Nasdaq. Nikon staged a rally from January to July of 2023. The cumulative capital appreciation was almost 70% in Japanese yen, but the relative performance was less impressive at about 15 to 20% appreciation. Why? Because Nasdaq showed strong performance too, with around 30 to 40% appreciation. Also, the Japanese yen depreciated by about 10% for the same period. These factors made 70% gain less impressive on relative and currency-adjusted basis. Next, let's take a look at Walt Disney relative price series. Here's a quick code that will compute relative performance. We see that from March of 2020 to March of 2021, Disney staged a rally. But this appreciation was weak relative to S&P 500. Disney's absolute stock price peaked in March of 2021. But the relative price series barely show any new highs in comparison to the relative price peak in December of 2019. From March of 2021, everything went downhill for Disney. Around November of 2021, Disney broke through its relative price floor of $80, achieved in 2020. From there, the stock depreciated by about 40% due to various fundamental factors. One can view this exercise as a one-stock study case, but it shows that using relative prices in the right way can signal opportunity. And this is before absolute prices take notice. Finally, let's take a look at the relative performance of Apple, Nvidia, and Qualcomm. We can rebase relative prices further by dividing them by the first relative price in the series for each stock. This action normalizes relative prices to 1 and makes it easy to compare stocks. Here's code that does this. Comparing relative prices for these three stocks, we see that Qualcomm was an utter laggard. Apple showed strong performance, but Nvidia smoked them all. This will be it for this tutorial. I'll link the code used in this video in the description. Please give this video a like and subscribe for more content related to investing and personal finances. Thanks for watching.